Okay, good day everyone. This is a first look at OCBC. Alright, when I take a first look at the company, normally I'll find its latest annual report, which happens to be its annual report in 2023. Right, so information data in this presentation is as of 31st December 2023. Right, so please bear that in mind while you're listening. Right, I tried to look at a 5-year summary of the results, right, of total income. Right, just bear in mind that 2022 was a COVID year. Right, so 2022 would have a lesser total income than 2019. Right after that, there's some form of recovery. I think they fully recovered roughly between 2021 and 2022 lah. Right, I think by 2022 they more or less recovered by looking at the numbers. Alright, but if I compare the 5-year performance from 2023 to 2019, right, 2023 has improved by 24.2% in terms of total income as opposed to 2019. Right, I also look at net profit. Right, net profit has improved by 44.2%, right, as opposed to 2019. Right, so we'll just ignore what happened in between due to the COVID disruption here. Right, and this number here for their net profit is actually a record net profit for OCBC. Okay, these numbers here I don't really have much to say. I'll talk about the basic earnings per ordinary share instead. Right, you can see that $1.12 in 2019. This one dropped to 80 cents due to COVID, and then now we are back to we recovered somewhere around here lah, right, 2022, and then this bump is probably something to do with the spike in interest rates that happened in 2022. Right, so normally 1 year later then the good results for the banks come lah. That's more or less the same as DBS as well. Right, so if I compare 2023 to 2019, the improvement in basic earnings is 38.4%. In terms of dividends, it has gone up by 54.7%, right? So you can see 2019 the dividends was 53 cents, and this drop here is due to MAS preventing them from paying more than 60% of the previous year's dividends. So this cap was actually artificially done by MAS. They could have paid out 53 cents based on their earnings. Right, you see they earn 80 cents, so it's quite comfortable for them to pay 53 cents, right? But instead they paid 31.8 cents. Right, so anyway, they recovered to 53 cents in 2021, and then it kept going up lah, the dividends, so that's a good thing. Right, net asset value only rose by 13.3%. Right, if we look at return on equity, right, more or less it looks like their long-term average return on equity just based on this data is 11+%. Clearly this is disrupted by COVID and this still recovering, so I won't bother including these two data. So I estimate their rough long-term return on equity without the high interest rate environment as well as COVID, right, probably around 11+%, right? So in 2023, obviously their return on equity is better at 13.7%, but of course this is pales in comparison with DBS. DBS had 18% return on equity during the same period, right? And might explain why DBS is actually trading at such a high price to book ratio as opposed to OCBC, right? DBS is very close to 2 times price to book. OCBC, I believe, is quite a bit lower than that, right? It's above 1 time for sure, but definitely not near 2, right? So one of the reasons could be return on equity. I think actually not one of the reasons, maybe it's the main reason why the return on equity for OCBC is a bit weaker, right? At 13.7, DBS is 18. Right, in terms of wealth management, right, they have $4.9 billion increase in Singapore savings accounts, with market share increasing by 3%, right? This is good, they are gaining market share, right? 30% growth in terms of number of family office for Bank of Singapore, which is their private banking arm, right? They are first Singapore bank to enable fully digital account opening for foreigners from Malaysia, Indonesia, mainland China and Hong Kong relocating to Singapore, which is okay, right? Top 2 bank assurance player in Singapore. I wasn't quite sure what this is, right? So I went to Google. Apparently it's the selling of life insurance and assurance, which I think is insurance, right? Right. So I think it's and other insurance products and services by banking institutions. So I think they just support Great Eastern in selling in their own banking branches lah, which is unsurprising because I mean OCBC owns a big part of Great Eastern. Right. So in terms of insurance, yep, Great Eastern is the largest agency force in Singapore and Malaysia combined. Right. It also has the largest market share of life insurance sales in Singapore and Malaysia. Right. More than 16 million Great Eastern policy holders. They are trying to acquire a bank in Malaysia to expand their Great Eastern's potential market. When this was chairman, they talked about the fact that The net profit of 7.02 billion, discussed earlier, is an all-time high with a return on equity at 13.7%. They did not say this is an all-time high, but I'm guessing it might be. Alright, so dividends is 42 cents per share, which means full year dividends 82 cents, right? 21% up from the 68% in 2022. Right, this is a 53% payout ratio. Right, they seem to have a set payout ratio for OCBC. That means to say that they more or less know they want to target a payout ratio of 50% to their shareholders. Right, and DBS is also currently paying around 50% payout ratio. However, between the two, right, I think DBS is more likely to increase their dividends because I don't think they have a target payout ratio, at least as I understand it from DBS, but OCBC has one, right? So I don't think OCBC will be increasing their payout ratio. DBS, on the other hand, as long as what I read from Gupta's writing, right, and over the three interviews that he have with in terms of quarterly report, right, it seems like he's targeting a greater than 50% return to shareholders in terms of payout ratio. That's my sensing, alright. He didn't say exactly, but that's what I think. Right. So anyway, so they say they are unique because they have comprehensive banking, wealth management, insurance and asset management franchise. They have a leading standalone private bank in Asia, Bank of Singapore. They have Great Eastern Holding, the insurance arm, Lion Global Investment, one of the largest asset managers in Southeast Asia, and Bank of Ningbo, domestically systematically important bank in China that is ranked among the top 20. Right, they have a core market in Singapore, Malaysia, Indonesia and Greater China. Right, so cross-border wealth flows they can capture through the private banking hubs in Singapore, Hong Kong and Dubai. The rest not so important, right? So Helen is the CEO. I think she's relatively new, right? So the net profit is up 27%, right? This one is already discussed, all-time high. Return on equity to 13.7%. Again, I believe at least this is a 5-year high, but I'm not sure whether this is all-time high or not. Right? Total income up 20%. Net interest income reached a new high to 9.65 billion. Alright, net interest margin is 2.28%. No interest income also increased by 7% due to trading income and investment gains. Overall fee income was down, however, right, due to subdued investment sentiments and wealth-related fees, right? So the wealth-related fee is not performing so well. Assets under management, however, expanded 2% still, all right. So their cost-to-income ratio is 38.7%, which is just slightly lower than DBS, right? So I did DBS numbers here to compare, right? So DBS net profit was up 26%. In 2023, right, OCBC was 27%, so actually OCBC did slightly better. ROE 18%, but this is where DBS really did very well, right? So OCBC only did 13.7% ROE, right? NIM for DBS is 2.15%. I'm actually surprised DBS is lower than OCBC, 2.28%, right? And cost to income ratio, DBS is slightly higher, but I think it's negligible, right? 38.7 to 39%, right? Despite the challenging business outlook, overall loans rose 2% in constant currency terms, alright, because of the high interest rate environment, right? They still managed to get 2% more people borrowing money, right, or in absolute terms, right? There's a decline in trade loans, which will reflect the current operating landscape, right? Asset quality, I think no worries there. Dividends we've talked about. There's a chart later to look at it, so we won't talk about it, right? So this is talking about all their branches, I won't go through, right? But what actually went on is that they are creating this one group, one brand approach across everywhere, right? So they give an example of how this can be beneficial. They say a Chinese company venturing into Indonesia to tap on its young, large population, abundance of natural resource. OCBC is present in both mainland China and Indonesia to provide similar support. So when Chinese companies want to go to Malaysia, Penang, for example, with its established ecosystem for high-end manufacturing, OCBC is there as well, right? So when companies set up bases in Hong Kong and Singapore, from which they expand, again, OCBC is present in both locations, right? So the owners of these businesses can be referred to OCBC Premier Banking or Premier Private Client or our private banking arm, Bank of Singapore, everywhere these customers go, they can bank OCBC, right? Exciting potential to showcase the benefits of working as one group, right? By leveraging of our collective strengths, right? This sounds very good, I think, right? But firstly, I think that it's quite a niche situation whereby a China company wants to go to Indonesia to set up its expansion, right? It's possible, but I'm not sure how much this will actually add to the bottom line. And secondly, all this kind of integration thing, right, frankly to me is often, it sounds better on paper than it actually is in reality because of incentives, right? So how are you going to incentivize people to, support each other across countries, right, unless the incentives are actually done right? Right, but anyway, that's what she says, right? Net profit, I won't talk about it, right? It's more or less a trend up, except for this blip is due to COVID, so this is a recovery phase, right? Dividend payout ratio, you can see that they are a little bit more generous nowadays, right? 2019 to 2022, don't ignore this part, because you see, this 2020 July, they said that MAS capped total dividends per share of 2020 at 60% of 2019, so this one is no choice but to pay less, right? So 2021 dividend cap was lifted. Right, so you can see that at first they are very conservative, less than 50%. Now actually last 2 years they've gone above 50% to give you 53%, and this increase is in line with their net profit. Right, so why they give out more money as dividend? Because their net profit go up, they maintain the same payout ratio. Right, so these are their insurance and asset management arms. Right, I just put here so we understand a little bit better about it. Right, so yeah, they say the insurance arm is diversifying business pillar, right? Increase its stake to 88.4%. This one is higher already, alright? So I'll do an update when I talk about the first half results 2024. Alright, they look like they are going to buy these insurance arms, I believe, in Malaysia, alright? And I think that because these things I think belong in this bank, then they can probably expand through these bank's customers as well, alright? So yeah, I don't think I'll talk too much about this. The asset under management part, which is Lion Global Investments, right? So they actually come up with this kind of ETFs, right? You can see Singapore Low Carbon ETF, China Leaders ETF, and OCBC, Lion OCBC Securities Hang Seng Tech ETF, right? So basically these are things that allow people to buy the ETF, and they will make the management fee for it. Right, so with that, I'll end this presentation. Please note there's no buy or sell call, and all of this is not financial advice. Thank you for listening.